From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 4th, 2016. I hope you had a great weekend. Are ready to get started trading this week. It is important to mention that there is a U.S. bank holiday today in celebration of Independence Day, which means there will be no live trade room today for our members. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities when we get started trading this week after the bank holiday. I also want to make note that at the end of this week, U.S. jobs data will be released. I bring this up because the release from last month was significantly off of the forecast and produced some significantly high volatility. And so we'll look forward to that at the end of this week. So let's get started here on the USDCHF, the US dollar versus Swiss franc. A couple of things to point out: the long-term downtrend channel highlighted between the two red trend lines that you see here on the chart. That's important to note. Of course, we had the Brexit news from a couple of weeks ago, which caused the market to run up towards the top of that downtrend channel. So that's interesting to note as well. We also pushed through the 100-period moving average. But over the past week since that Brexit news, we've seen the market pull back or go into some consolidation since that news, and has come all the way back down on the gap from the weekend, back down into right around the 9,700 level, maybe a little bit below 97, but right around 9,700. Now it's come right back up to 9,750. So let's just make note of our closest support and resistance level. The closest support will be the blue shaded area down here, again, right around that 9,700 level. 96.90 down to 96.55 or 65 is the blue shaded area. Interesting, if you follow it back in time, you see many times where the market found support and even resistance around that blue shaded area into the 96.90 to 96.65 zone. So we know that that is clearly our support for the day today. Resistance will once again be back at the yellow shaded area, and that's back at 97.85, 97.50. You can again follow that back in time. We've mentioned many times where the market has found resistance, where the black box is, green circle, green box, red circle. Many times it's found resistance around that area as well. So we know that as long as it's underneath there, there's resistance. A break above the yellow zone likely looks for the return of the rise and the return of the uptrend back towards the top of our downward facing trend channel, back into the mid to upper 9800s, the purple shaded area up here at the top. If it finds resistance here again today, back down to the blue zone or lower could be what we're looking for the USDCHF this week. Take it down to the 4-hour time frame. Again, with the bank holiday, we may see some quiet market movement. So I would suspect that we'll likely see this yellow zone hold as our resistance for the day today, and we won't have enough momentum to get through it, back through it to the top side once again today. So definitely watching this yellow zone. If you're going to do anything today, maybe watching that for maybe some bumping its head into it today, some resistance, maybe some short sells here with your risk just above it, because you know if it breaks above the yellow zone, you probably don't want to stay in it very long. But we'll look at this further as we go into tomorrow. Let's move on over to the euro dollar. Similar situation where we saw the fall from the Brexit news and then a little bit of a rise or consolidation happening now on the euro dollar. I think this one will be much easier to see as we get down to the 4-hour time frame and make note of a few things. Last week we took a sell underneath the green zone. We had a little bit of profit, nothing extraordinary. It came back up, went back down, and then it came back up. Now we're sitting just above that green shaded area, which has been resistance and now offering some support above the 1.1100 level. The green zone is 111.20 down to 110.85. Staying above it, and as we are right now, again, very opposite of the US franc, we could be looking for the continued slide towards the pink shaded area, which is up towards the 112 level. 112 down to 111.80 is the pink zone. Now, if the market does decide to start going bearish again on the euro, then we'll look for it to break back underneath 110.85 and begin heading back down towards the lows down here at the blue shaded area. So at least now you know where your decision zones will be. I think as long as it's above that green zone today, and we won't have enough momentum to break back underneath it today, let's watch for potential support and the continuation of our current rise that we've been in for the past week and the retracement that we've been in for the past week for the euro dollar. Next, moving over to the GBP USD. Of course, this one significantly volatile on the Brexit news, and really it's been quite wide period of consolidation here for this pair between the pink, the yellow, and the green shaded area at the bottom right-hand corner of the chart, inside the black box that you see down there. The top of that, the pink shaded area, is 134.75, 134.15. The green zone, 132.10 down to 131.50. So you know that those areas are quite wide, but almost between 3,500 and 3,100. So it's quite a wide zone that you're seeing there inside the black box. So extreme risk is that your stop losses have to be pretty high if you're going to trade it. The yellow zone right in the middle, period of consolidation or congestion right there in the middle, 133.30 down to 132.90 is that yellow zone. Under it, we would suspect a turn back to the green zone. Above it, a turn back to the pink zone. Let's take it on down to the 4-hour time frame. Let me zoom out one time. And again, you can see what's happening. Under the yellow zone, down to the green zone. Above the green zone, we're bouncing between the yellow and the green zone. So again, under the yellow zone, I think the yellow zone, you might consider it somewhat of a hinge point. Below it, continues to slide to the green zone. Above it, back to the pink zone. So right now we're below it. There might be a little bit of a push back down towards the green zone, which of course is clearly your current support. And underneath there, if it ever gets underneath the green zone, you'd likely look for the continuation lower. Zoom it in again a couple of times. You can see that really clearly here by zooming it in, where the yellow zone is your current resistance, green zone is your next support for the pound dollar this week. Take it on over here to the USDCAD, the US dollar versus the Canadian dollar. Again, very much a pullback or consolidation happening here on this pair as well. We saw the Brexit news drive it higher into the 100 period simple moving average that you see there on the daily time frame, coming back significantly all the way back down into the mid 1.2800s. We also saw oil over the past couple of days or last week go up, challenging resistance highs, back down, back up. So we saw oil pretty much on par, the inverse correlation with those oil prices from last week on the US CAD. So it's pulled back down, so I would suspect we are seeing a little bit of a rise on oil, and yep, there it is. There's the US oil chart, and we see a little bit of a rise challenging the resistance highs once again into the green shaded area towards the 50 level. So that being said, as oil rises, we see the US CAD go down, and we'll watch for that. If the oil finds resistance, we might see the US CAD slide back higher again. So keep an eye on that. It is interesting, this rising blue trend line. We're coming down very close to touch that. We have the lowest low, one time here touching it, one time here touching it. Anywhere closer towards that blue trend line will be a very interesting support, and that would also be our low for right before the Brexit news. So interesting there into 127.80, 127.50, the yellow shaded area. But right now we're finding support Friday and today, finding some support right there at the 128.70, 128.50 level. It will need to get through that if it's going to go down lower towards that 27.80 level. So as long as it stays above there, we could be looking for a bounce on support and a rise back towards this blue shaded area. But until it does that or gives us significant clues of reversal, I'd be cautious about going long. Keep an eye on those oil prices. A break of resistance probably will break this orange zone and head to the yellow zone. If oil prices fall off resistance again, we might look for this to rise back towards the blue shaded area and into the resistance highs on the US CAD. So continue to watch oil prices. And again, keeping an eye on the bank holiday today in the US. Take a move on over here to the US yen. It's a very similar chart to the GBP USD that we just looked at. We had the fall from Brexit, and now it's been in a pretty wide volatile range between 103 and down here into 101. We've been bouncing around inside this black box for the past few days. Let's just take it on down here to the day 4-hour time frame. And again, we know that resistance is at the green zone. That's not too hard to see for the past several days. We have found resistance 102.80 to 103.15 is that green shaded area, and that's where the market is currently finding resistance. The yellow zone, again, is somewhat like a hinge point. We'll find support there, but underneath it, we'll look for it to head back down towards the low points of the range or consolidation down into the pink zone, 101. 0.50 to 75. So the pink zone support, green zone resistance, the yellow zone somewhat of a hinge point, and of course a break above the green zone, we look for a breakout and a turn higher. A break below the pink zone, a breakout and a turn lower. So until then, you could be trading between the green and the yellow zone at this point, selling the green zone as close as possible to 103, buying the yellow zone as close as possible to 102.20. That may be an opportunity for you in between the green and yellow zone until you get some significant breakout using appropriate risk strategies in all cases. Moving on over to the AUD USD Australian versus the US dollar. This one's been quite volatile as well. We saw some gapping from the weekend and now pressuring higher on the day today. We're pushing into the 75.35 level. Again, we'll keep an eye on oil prices because they can have a direct correlation here on the Australian USD. But resistance is going to be closer towards the mid to upper 7500s, the pink shaded area you see there on the chart. I may bring that up just a little bit. Let's bring that up closer to the top of the pink shaded area. Let's bring that closer towards 7590. 7590 is going to be the top of our pink shaded area now. And the bottom, I'm looking back here to the left, we'll leave the bottom where it is. So that's quite wide. We're looking between 75.55 and 75.90 in that pink zone, but we can clearly see that's where our last resistance high is. And obviously, we wouldn't want to buy it the closer it gets to that pink zone because there's a high probability of resistance. So buying close to the upper 75s, the closer you get there, the worse off you get for buying this pair. If you're going to buy it, obviously you need it to dip back down into support. The orange shaded area would be an interesting area, 7,500, 74.70. The next time to buy it would be a breakout above that pink shaded area. So if you're a buyer, if you're somebody looking to go long, you want it to dip to support or break through the resistance. The closer it gets to that pink zone, doesn't become a low risk, high reward opportunity to go long. However, the closer you get to that pink zone, may be an opportunity to look for resistance and reversal because the last time it was here, that's what happened. We could be looking for a double top. So that's something interesting we'll look for over the next few days. There it is, coming right back up, challenging the resistance highs into the pink shaded area. So again, continue to watch that and see if you get some evidence or clue to resistance or reversal. But again, an open and close, a breakout above 75.90, 7600 could signal the continuation. It is interesting. We've almost retraced the entire Brexit news volatility we've seen here. So I would suspect that the market will continue to try and pressure back towards that Brexit high once again. So continue to watch for that. Again, I still think buying it is a better idea back down in support, which would be closer towards 7,500 for the Australian dollar today. And lastly, moving over to the NZD USD, similar situation, but we're very close to our resistance high, the green shaded area at the top of the chart, 72.15 to 72.50. That's the green zone. There's the last high inside the little black box up there, and we're getting very close to that right now. So again, this would not be an opportunity to go long, but because you're too close to the resistance highs. Think of that as a price ceiling because the market bounced its head off it last time. You'll want to not buy it right now because there's a good opportunity for resistance into that level. Now, a break above there may change the story a bit. Getting above 72.50 might change the story and a continuation into the 73s, but right now, just not a great time to go long. If you're going to go long, you need it to go down. You need to go down here towards the blue shaded area. Let's take it down to the 4-hour time frame. And again, we've talked about this last week in the live trade room. Let me actually take two little shapes here. Let me see if I can draw it out as a little box. I'm going to draw it out as a little red box. So give me just a second to change that over to a little red box. And we'll put that on the chart right about right here because this is going to be important. We talked about this in the trade room last week. You see that little point where it broke above the blue zone, came back, dipped, and then rallied? Well, something interesting that happened over the past couple of days is that it did the same thing right here. It broke above, dipped, and rallied. So that's what you're looking for when you're looking for a breakout above resistance. Something similar to what you see there in the two red boxes to give you higher confidence in that outcome. So right now, we're underneath resistance. We know there's a possible, look just below those two red boxes here and in this area here where you see found resistance under the blue zone. So you don't want to buy it right now underneath the green zone because there's a high probability of resistance there. The only reason to buy it would be if it did this or this above the green shaded area. So buying right now on the New Zealand dollar just doesn't make a lot of sense, but watching for resistance and some intraday reversal off of that green shaded area may be your opportunity for the day today on the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.